Good evening, all. Ira Epstein of Linn & Associates with your metal market wrap-up for this Thursday, the 5th of August, 2021, 5:30 p.m. Central Time. So the day of reckoning is tomorrow. Now, what do I mean by that? We're all looking to see what's going to happen with the job data report. It's going to be important. The estimates are for about 840 to 870,000 new jobs to have been created, for the employment rate to drop to about 5.7%, the unemployment rate that is, and we'll see if the market gets anything like that. I've seen estimates as low as 350,000 new jobs to some near 1.2 million jobs. So they're all over the board. Now, how the market reacts to it will be the interesting part. Why? Because this sort of gives us an idea. Is the Fed on target? Is the economy on target? Is it going to take more time? Is it not heating up enough? Do people not want to work? There's so many questions. The metals have been selling off a bit on that news. I bet it's coming up. Copper market, we know, has been beaten down recently. So let's go and see what the charts look like in the metals. You're sitting now at 1805.10, which is under the 18-day average of closes by some $10 almost. That's going into now tonight for the Friday trade. Where it ends up tomorrow is important. If it ends up with a sharp break tomorrow, that could roll this chart over. If it can pick itself up and get over, I'll give you this idea right here on a closing basis, 1815, well, this would have been a correction, and then the market's again launching itself to the upside. We're going to find out. You know that we had a big rally the other day, and the market has given up from that 1835 level roughly all the way back to the 1800 level. So, you know, when you look at these things and you understand what the market did, you had yesterday, and this is important, an outside day. And the outside day was to the upside. If you have an outside day up and you take out the low of that day, this is my rule. I have not seen anyone else explain it this way. But if you take it out within 2 trading sessions, I look for the market to fall to the nearest key moving average if there's one under the market, or the Bollinger Band. And I'm wrong in my analysis if it went back over that high after the low is taken out. So I guess the next step we have to look at in looking at this is where the moving average is. And if you look at the moving averages, and I'll take you back to this, I had said if it takes it out, you're literally on top of that number. It's not a trick, but it could have been further down. You hit it, and you can see what you're doing. You're in that area and holding. The Bollinger Bands are also under that. So the market's got what we'll call one of these ugly charts, and chartists will tell you that. You get these big spikes and you fail on them. You don't even know where the right highs and lows are to mark on the chart often. You've thrown the pattern out of whack. So the market's really caught at this time between the 2 Bollinger Bands with the 200-day average there, and on the way back up, resistance at the 100-day average and the 18. Momentum pointing down at this point. When you look at the gold-silver ratio, it just keeps going back to that 18-day average of closes and holding it, which means silver's losing to gold. And on the silver chart, I had mentioned to you just the other day that if you had a rally, you went up, you have 3 levels of resistance. Even if you have an uptrend, you've got the 200-day, the 100, the upper Bollinger Band. The market today, Thursday, went right through these lows, so you've stepped out of the trend. You have no trend at work. You have a higher high, lower low. In other words, one shot out, as I teach it, and market hit that resistance and backed off. In the copper market, I did make mention, and I'll stick with what I said, the market acts like it's running out of downside momentum. At the same time, it's not trying yet to pick up through the 100-day average by much. You can see each day that it's come down. It sort of gets there and makes a run like at the end of the day today. We finished near the day's high, as you can see, just shy of that, the 100-day average. So I expect that's going to still be the resistance point. There's no reason that I can see to be long at all, and to be short carries just too much risk. Where would you put a stop over the most recent high? Back into the 450s from here? $5,000 risk in one contract? I don't think so. Sometimes there's just not something to do. In the platinum market, look at how you're falling apart right here. And in the process, you're established what? Well, we cannot count the Friday action, so let's get that off. We can go to the Thursday action. Both numbers are under 20. Both under 20 on Wednesday, and now let me get you to Tuesday. Come on, there you go, both under 20. So you have what we call a conversion from being oversold to locking in a downtrend with an embedded reading until the market gets with the red line back over 21 on a close. I say that the pros will want to sell this market. Now, if you've taken my enhanced Bollinger Band course, you know how to play it. I'm not going to tell you here what to do. It's very important to learn that. In the palladium market, you have momentum pointing up, and this was a contra-trend rally where the market went to the 18-day average and ran out of steam. You can throw all this chart analysis out the window after the jobs data comes out. If it comes out in that 870 level, you probably don't get an awful lot of crazy reaction. But get anything up in near 1 million jobs. Get anything back under, let's say, 700,000, 600,000 jobs. That's going to create the volatility, I think. Do I know? I'm giving you an educated guess. We then come over to the dollar index, which is now hit its downside target. Now it's getting a pattern of trying to get a rally up and going into the 18-day average. Now, if we look at the low here, you can see on that low you hit a low of 91.78. You fell back, hit the Bollinger Band again, popped higher. So you have a pattern of higher lows, higher highs. I'm looking for resistance at 92.50, but the chart's got to restructure itself. There's not much I can tell you to do one way or the other here. In the Ethereum, you keep every day hitting this upper Bollinger Band. It's a sign of strength, and it's now done what we talked about just the other day. I said if you keep doing that, what often happens is you drag the slow stochastic indicators over 80 and you force them to embed. And it's just what happened. So again, if you take my course, you'll learn if the pros are going to buy the break. I'm not going to share that with you here. They know what I'll do in the morning, those that have done that. And this is the setup. So we'll see what the market does. I can't answer it just yet. I want to remind you, whether you trade in the futures markets or the spiders and ETFs, each morning I set you up early for the day's trade on charts. I'll start you off typically with the news of the day around the world, get you going for how that could impact the market, what report times are coming out. In the morning, I sometimes wait on the ETF to get up to the 9 o'clock reports. I want to cover them, and then I start recording the video, and I get it to you after 9:30. That's plenty of time. The market's not even open an hour, so you've got your time to make your moves. I cover this with technical analysis on over 40 charts in each of these videos. The videos are each typically 15 to 20 minutes long. To make that easy, when you go to the website, there'll be a scroll bar here, and you just pull it. So let's assume that you wanted to trade, just making this up, the metal markets. I'm doing that tape. You pull this to the word metals pops up, and it's big, and it's going to pop up. Saves you time, or you can watch everything to learn, because I'm constantly reinforcing what I teach. If you're in the SPDR ETF, it's the same way. You'll have that on the website. You'll have that scroll bar to go from, and away you go. Now, if you're in North America, I send a text and an email when I've done the recording. You can watch it also on your application, on your phones, tablets, or whatever. But if you go to our website through any of those, then you can do your scrolling, just as I said. We can't put it on the other videos. It's due to the technology as to how it's all done. I wish we could cover that, but it just doesn't allow it except when you're on a website for the scrolling feature, like I've said. You can scroll, but you're just not going to know exactly where you're at. You'll see where you're at on the charts. How do you get started for all that? You're going to end up at $16.90, and you're going to get each week 12 videos. You think that's not worth it, with each one 20 minutes long? And one of them is going to cover for you the weekly charts on the weekend. I just look at the long-term picture, and then during the week, if I see the long-term picture needs adjusting, I bring that in. Go to our website, www.iraepstein.com. It's pretty simple to do it. You'll see an icon up here as well. That'll take you into those areas. Click on them. I'm Ira. You have a good day.